Hello, everyone. So when Lewis and Fintech Week asked me to talk about some things that are going on outside the world of finance into the blockchain, I was thrilled because I love it. And then he told me it was the penultimate session of the day on day 4 in a basement. I was like, thanks a bunch. But actually, I think the things that I hopefully am going through in a minute are fairly easy to digest, and in the context of some of the talks that have happened this week, might even be classified as light entertainment. Which is nice, so there's nothing too heavy. So I will get to what is happening in terms of companies, fundraising, topics, etc. But I think before we get there, it's worth pausing and saying why the tech outside of the world of finance is interesting and what impact that has for finance itself, actually, funnily enough. But before that, I want to throw out a few predictions. Disclaimer, they're not wild. I've used the word wild because wild sounds interesting and dangerous, and I'm trying to keep you engaged, given that it's quite late in the day. And it also begins with W, so it looks nice on the screen. Now, just to give you a quick background to me, I've spent my career up until relatively recently in financial services. I've worked for investment banks, buy-side firms. I've worked on every product that you can think of: equities, fixed income, derivatives, ETDs, etc. Know that world very well. And I sort of got sucked into Bitcoin in the world of blockchain maybe about 18 months, 2 years ago, just out of pure interest. And then before I knew it, interest had turned into an obsession. And then obsession had turned into a want to do something. And I formed a company with a couple of other partners. Interestingly enough, they also have similar backgrounds to me, very different in terms of, I guess, domain expertise, but all within financial services. One is a guy that was a senior risk manager a senior person in the risk business for Riskmetrics, former academic. And the other guy is someone who's built a career out of building distributed trading systems at investment banks and hedge funds. So the three of us got together, and we were really interested in the technology and what we can do with it. So what do 3 middle-aged or approaching middle-aged guys do with a lot of experience in financial services, blockchain, in an environment where there's lots of money flowing into blockchain? What do? We don't do anything to do with finances whatsoever, which is a little bit strange. But we wanted, to take the opportunity to do something different. We saw an opportunity to apply the technology outside of the world of finance. But actually, this is sort of a fairly decent representation of what Mrs. Gass thought about it, quite understandably, I guess. But there is some logic other than just an interest level. And the logic, hopefully, will become apparent in terms of why we've gone the way that we have. So let's start off with some predictions in terms of adoption and what the blockchain can do outside of the world of finance. So blockchain technology can solve real business problems, and in the process, the finance business can become disrupted. So, as I said before, I've been working in financial services for the last 20 years or so. And the funny thing is about financial services, it's really bloated. There's a lot of business that's been built on top of finance, but financial services really should do nothing more than just help with the assistance of allocation of capital. That's all they should ever do. But there's lots of businesses on top of businesses, and the blockchain, for sure, is a really good technology to apply to the world of financial services because it just streamlines a lot of stuff. But actually, if the same tech can be used within those the specific businesses that are looking for funding or whatever they're trying to do, then it's a heck of a lot easier to turn their attention into finance matters for an environment which already is working for the domain in which it's used. So if you've got a blockchain or a series of technologies that's really streamlining and helping the operations in manufacturing or whatever, then adding on finance is a very easy thing to do, in theory. And the other prediction is that we'll see faster adoption of blockchain tech outside of the world of finance. Now, that's somewhat counterintuitive when you look at the money, and we'll come to the money later on. But this is something that we really do believe, and it's probably the main reasons why we're interested in doing stuff outside of the world of finance, is because it should be easy to adopt. So, watch out finance. Yes, is my answer to that one. Okay, so let's quickly talk about why I'm saying what those predictions are, particularly around adoption. So, non-finance businesses have two distinct advantages when it comes to adopting this type of technology compared with finance businesses. So let me start off with just a statement. Does anyone know about the n-squared problem? I'm not expecting a yes. Does anyone know about it? As in, good, no one knows about it. That's quite appropriate. Okay, so all this is, it just concerns the number of connections that it takes to connect a network together. So if you've got a network of 1 million persons or 1 million nodes, if you're talking tech speak, if you need them to get to talk to all of each other, then obviously that's a heck of a lot of connections. You add one more node to the network, which is nothing in terms of the total population of nodes on the network, but it needs to connect to every other existing node on the network. So what you end up with is this exponentially increasing number of connections in order for the network to talk to each other. Now, in finance, they've come up with some quite innovative ways of dealing with this problem historically, which I'm just about to come to. But that's not just a problem in the world of finance. It's particularly acute, these problems, when you've got value of some sort of worth, so data that has value, or complex data that might require a bit of processing or agreement, or some sort of communication flowing between the nodes on the network. That's when it becomes really problematic and you need to solve it. Now, obviously, in the world of finance, you've got incredibly important data, so they absolutely must solve the issues, because the network as a whole must agree on stuff. You can't have double spending, you can't have fraudulent activity, etc. So the network as a whole must agree on the integrity of the data that resides within it. So I was saying, what's quite interesting for me is that coming from a world of finance and then comparing that to the other domains that we're now looking at is quite interesting, because you realize that some of the innovative things that the finance industry does, and does quite well, but you don't see it outside of finance, which I guess I'd appreciated when I was purely in the finance world. Well, and the simple solution that the finance world comes up with are central authorities. And it does this time and time again. So the story goes something like this. You get everyone in a room, and you look around the table and you say, okay, do we trust each other? No. Okay. Do we like each other? No. Okay. Do we all have this problem? Yes. Okay, how are we going to fix the problem? And the answer comes with throwing some money into the room, and you put a governance structure on top of the money, and everyone will bow down and then just reconcile to the organization that's just created. So whether this is MasterCard, Visa, Crest, DTC, Euroclear, you name it, you could even extend up to the Bank of England. That's the only way that the finance world has dealt with this issue of stupid amounts of connections, because suddenly you really only got to connect to one thing, and once you connect to that one thing, that will then manage the connections everywhere else. And it's a very effective tool. You don't see it outside the world of finance, or very, very rarely. Now, one of the ironies that this then creates in terms of adoption for blockchain is that even though these central authorities are a bit of a pain, they probably charge too much money, they certainly make too much money, they inhibit innovation, there's lots of bad things, but ultimately they still sort of work, and they're still sort of efficient, which in the context of adopting something new is a major problem. Which is the first distinct advantage of application of blockchain tech outside of finance. Because if the bar is up here, because these central authorities have made it sufficiently efficient, it means that this blockchain tech, which sort of negates the need for a central authority in the first place, has to go above it and then some in order for it to make sense. Otherwise, you just keep the status quo. Well, the world outside of finance, the bar is not this high in the first place because those central authorities don't exist. It's down here somewhere. So it means that in order to come up with a meaningful application or use case, it should be easier. Okay, next thing. So hopefully you would have learned a little bit this morning. I don't know if anyone saw the talk from Addy and the prior talks this afternoon. But blockchains are a very efficient mechanism for exchanging and coordinating data that has value. That's why everyone's so excited about it. So the next logical question is, does data of value exist outside of the world of financial services? And I'm not going to hang around here because it's obvious. Of course it does. And this is the next distinct advantage for non-finance applications using the technology. Is because as societies, if you think about any form of data, from data we really don't care about to data we care about a lot over here, the finance world is operating at this level. And we've got rules and regulations and systems and processes around that. But not all data fits into these sort of extremes. There's data value and data sensitivity at the whole entire spectrum, which means that there should be points along that spectrum of what data has value that could employ this type of technology. Now, for sure, there's stuff outside of the world of finance that's equally sensitive, like healthcare, which is something that we have been working on quite a bit, but there's a heck of a lot of other stuff that isn't subject to the same rules, or anywhere near the same rules. So just to give you a list, I'm not going to go through these. Hopefully they're very familiar and sort of self-evident list, but you can see, when it comes to digital media, there's not a lot of, in fact, if you look at most of that list, there's really not a lot in terms of rules or regulations. Yes, there will be some, I guess, applicable laws that might pertain to it, particularly around identity, for example, but actually most of that stuff is not going to be subject to the same level of scrutiny and rules that you get inside financial services. So the other thing that's quite interesting, there was a report released at the end of last year, and it's actually it's a pretty decent report, so if you've got the time, I would recommend reading it. But when the government or the chief scientific advisor is releasing reports that tell you about the non-finance applications or applicability of blockchain tech in a government context, then I think that's sort of the cat's out of the bag, so to speak. It's obvious, it's absolutely right, and if anyone's been following the press, the government is actually doing a couple of projects now, or proof of concepts themselves. There was one to do with benefits, which is quite an interesting one that came out recently. Okay, so let's go to the meat and two veg. So I'm obviously a background in banking and finance, so the first place I would look if I was trying to gauge what activity is actually going on in the marketplace, or just see what is going on in terms of financing of businesses. And this is a bit of an odd graph, or odd series of graphs. It's the source from CoinDesk. If you've never heard of that, it's sort of an online magazine, but they do a pretty good job of tracking VC and seed money investments into blockchain and Bitcoin businesses. And a pretty good job of classifying those businesses as well. Now, what's quite interesting here is that if you look at the highest chart where the most amount of money, funding has been invested, is in this sort of concept, this category of universal. That's not particularly helpful, I don't think, because there's a lot of things that get thrown into it. So Coinbase and Circle, I would argue, are just financial services companies anyway, but just of a different ilk. 21 Inc. is different. It's more of a Internet of Things mining play. But there's a bunch of stuff. But generally, that orange line, I'd just chuck into financial services, which is the next one down. So suddenly, financial services is much higher. Which then, if you look at the categories on the right-hand side, actually, to be honest with you, I'd argue that most of those are financial services anyway. So the only obvious examples in there that are probably not financial services tend to get lumped under infrastructure. And I've listed a couple of companies that are fairly high-profile companies that receive large funding. So that infrastructure line at 150 is about 10% or so of the investment to date, according to this. But obviously, this isn't completely inclusive. But the theme of it, basically, is that there's not been that much, not relative to other investments. So you think that, okay, maybe there's not so much going on then. And I think it's partly just a timing thing. I think that the finance community at large at the tail end of last year caught the bug, or rather woke up to the fact that blockchain tech could be quite disruptive to them. It sort of coincided with the release of Ethereum and a couple of well-known companies like Digital and R3 getting well-funded. And then suddenly there was an explosion of interest at the tail end of last year that basically just hoovered up a lot of resources. But actually behind the scenes there's companies like ours that are definitely looking at applications outside of the world of finance. And there's this tracker that's being run by a company called Blockchain Angels, where they tried to get their hands around the, I guess, startup community in blockchain businesses. And what they're working on. They've done a pretty good job. I think there's about 600 or 700 businesses that are listed in that tracker. Again, it's not definitive. There's definitely stuff that's not listed on it that probably should be. But if you look at that data split like this, then actually it tells a slightly different story in terms of not funding levels, but activity. And you could probably broadly categorize about a third of that stuff as financial services, but that just means that obviously 2/3 isn't. And the 2/3 is pretty well distributed across a range of different things. And you'll see certain sectors here which tie back to the stuff that I was talking about before in terms of media or provenance, notarization, etc. So if you've got an interest, that's just online. There's a link at the bottom there if you want to check out. It's fully transparent in terms of who's there. But I thought it might be worth just highlighting a couple of, well, it's more than a couple of businesses under the sectors, because it does demonstrate the range of different data sensitivity levels and why it might be interesting in terms of adoption. Because right down here in the bottom corner, we've got healthcare. Healthcare, in my eyes, is just as problematic or just as difficult to penetrate as financial services. The one difference that it does have is that there's a real need to solve the problem. We've got some huge funding challenges over the next 20 years, 10 and 20 years across the globe in terms of funding of healthcare. So there will have to be innovation in that sector to try and think of different ways of delivering healthcare, unless we're just going to provide less of it or pay a lot more for it. So I think these type of technologies might gain adoption because it's a genuine path to help solve some real problems that we need to solve. Outside of that, yes, identity is a big one as well, and it comes with a few rules, but there's loads of stuff going on identity, which is really interesting. But outside of that, actually, there's not a lot of rules. And certainly when you start heading up to the top left-hand side in terms of media and social networking, now these companies up there, they may or may not make it. Not sure. They're really good. I mean, Ujo was mentioned, I think, in the previous one. That's a really interesting case. And there's a TV company that I think is called Singularity TV that's doing something similar but for film. But whether they do or they don't is slightly, for me, academic, because someone will. That's more about just getting the ingredient mix right or the sales pitch right, the market right, whatever it is. Once it's done, it will change things quite radically. Now, hopefully for them, it will be them. If it's not them, I'm sure it will be someone else. But what's interesting, you do not need anyone to tell you can do this. This is something that you can just test and do, which is the main difference between that and the world of finance and the world of some other highly regulated businesses as well. And at that, I'm going to pause. So does anyone have any questions?
One of the biggest problems with all of this stuff is that everybody's creating silos of identity.
Yep.
The challenge is, the whole point of a distributed ledger is it's distributed and there's a whole set of common standards and a common approach so that some of these things will potentially sit on top and have a common approach to solving identity, but compete on the applications they deliver, like James doing it for healthcare, for example.
Yep.
What's your view on how you make that happen in the marketplace so that everybody gets the benefit of identity, which is what everybody wants, right?
Yep.
But these siloed based stuff is never going to happen in reality.
Identity, I think, is a particularly problematic child, just because of the nature of it. Because you've got, so blockchains are good when you're trying to enforce trust, obviously, but with that trust comes a lot of transparency. Now you can try and hide certain things, you can pseudonymize things, but ultimately, I think you'd have to be personally very careful about how you structure the interaction of identity and blockchains, depending on the use case. But identity sometimes is extremely private and on the other hand, extremely public. And I think, provided that you're dealing with the public end of identity management, and to be honest with you, in that case, I'd throw it open more in terms of decentralized networks. I'm sure, you'd have to think about the particular use case, but my bias would be it's probably better on some form of decentralized network than a private network, and provided that you're not doing anything that's private or has privacy implications, then I think it's fine. I think that's potentially good. However, I think it does depend on the use case. Identities are used in lots of different ways in lots of different circumstances. If I park identity and think about other applications of the same question, I remember chatting with Joe from Consensus a while ago. We were talking because Joe, so the guy who heads up Consensus, which is one of the big dev companies in the space, he was also one of the founding members of Ethereum. He's got background in financial services as well, and I think when you look at us as humans trying to educate ourselves as to what this tech might mean, I think it's actually appropriate in the near to medium term to use private chains quite a bit, even though I take on board Nick's comments in the previous talk quite a bit. I think there's much to learn yet about what the long-term governance issues or implications of decentralization are. You saw it with the mining concentration in Bitcoin. We saw the thing with Ethereum. So those aren't things that you should be taken lightly. And so if you're trying to use the tech now for things that are really important, like financial stuff, then actually I think it's totally appropriate now to use private chains until we get more history, more understanding of the complications. But running in parallel, I wouldn't really be surprised if we continue to see more experimentation of those sorts of issues play out in a decentralized arena. And I can totally imagine a world 10, 15 years from now, where actually a lot of the things that we're fearful of putting in a public space because it's sensitive, financial information, that we may have addressed those issues, and at that point there could be another inflection or tipping point where we built enough knowledge in the private space so that we understand more. We've tested some stuff in the public space, and over time everything should, if it's completely interoperable, like as in decentralized, then you would imagine that's a better world to operate in general. But it's not an easy question to answer. Yeah, I know.
That's a good point. Okay, thanks,
All right.
Ian. Thank you so much.